Hello everyone, here Chris Capri, founder of Second Skies. Today we're going to talk about one of the tougher subjects for people, long-term trading techniques, and this will be the first one in a multi-part series here. But it's a very powerful method. It's a way to increase the size of your account very fast with, or not very fast, but with one large trade. You can really change the size of your account instead of having to do multiple trades. It's a very powerful method. It takes a little bit of patience, which is something that is tough for traders these days because most traders these days have ADHD when it comes to trading. But if you can learn how to wrap your head and really master this technique, you can really see your account size grow fanatically within a decent period of time. Let's get into the technique here. So this is something I'm going to call the necktie. Based on the fact that the lines are green and blue, we might have to call it the Peruvian necktie. Anyway, so it's very simple. This is just an incredibly simple system. I like to apply it mostly on yen pairs on daily charts. And it's so simple. The two lines are moving averages, EMAs. I like to set up a 20 and a 50 EMA. And what I'm looking for is I'm looking for not just a cross, but I'm looking for a formation where it kind of creates this kind of necktie feel, where each side is about even in terms of its shape and its spread. So therefore, if the angle across is decent enough, it should create sort of a similar movement. And what it's really saying is, hey, we're going to see a price cascade in a nice little change of direction here. And so the simplest method to trade this is that once the crossover happens, I get in on the close of the candle the next day or pretty much win the crossover. But if the close of the candle is a little more conservative, that's a better way to go to kind of increase the chances of higher probability setups here. So I get in on the cross and I exit on the cross. In this case, you can see on dollar yen, very profitable method. You would have gotten around 120 and exit around just sub 105. A nice 1500 pip trade, and it only took you about 6 months to do it there. So again, 6 months, most people probably die, shoot themselves, hang, or perform harakiri on themselves before they actually let a trade go an entire 6 months, especially watching the balance ping pong around there. But bottom line, long-term trading will boost your account in a huge way, and it works incredibly well. All right, let's take a look at euro yen and another yen pair. So we see the crossover happening with the shorter moving average crossing the longer moving average at a decent angle, suggested that the change of hands is in play. A nice move is going to happen, a continuation in that direction. And we have this little necktie formation here is the right bow, the tie, the left tie. Here we're getting in around 160, and we're technically still in the trade 838 pips later, along with the carry the entire time. And this is only about 3.5 months. Not too shabby, a 3-month trading system there. All right, another one, pound yen, the menace of them all. So this one went on a nice long sojourn here, meander all the way up, created the little necktie formation. Orders would have probably get in right around just sub 235 and exited out just sub 245, so a good 1,000 pips. Again, along with the carry, and 4.5 months to do that. If you see a really impulsive sell-off, that might be impetus to exit out a little bit early. So for example, a 1,000 pip drop, which is what happened here in a week, that might be a sign, hey, you might want to start looking out to exit your shorts, because there are probably others that are leaving a mass exodus to get out of the long positions there. All right, moving on to the next one here, just to show you how it works even on a 4-hour chart, holding positions safe for maybe a week or so. This is a nice little move here. We have a nice little necktie formation. The pair crosses, showing that the threshold and container is now towards the upward bias. So getting in sub 156. This one left a lot of pips on the table because of the impulsive sell-off in a handful of hours, but you still got out at 158. So you got in between 155 and 156. Nice 200-300 pips in a week. Not a bad week at all. All right, now last one on the board here for our super simple method here is the Aussie yen. Again, yen pairs. This one rocks because they trend the most, and they tend to have the most consistent trending moves of all. So nice little Peruvian necktie formation here. Crossover happened right around 98.50, and this thing kept you in it. It had a couple of threats, but never, nothing ever, going to DEFCON 5 here. So bottom line is that the thing kept you in until about 102.50. Good 400 pips on the board, and it probably took you about 2 weeks to do that. Not too bad at all. So that's the Peruvian necktie. All right, to sum it all up, this is just an uber simpler method here. Anybody can wrap their head around this. I could probably have a 13-year-old trade this method here. Because it's just not complicated. You're just following a couple indicators, you're looking for the crossover, and you're getting in on the exit of the candle after the crossover. The important thing is to watch your indicators for entry and exit signals. So they will tell you when to get in and get out. The EMAs are more sensitive to the closing price, and so they're going to be following any sort of rapid adjustments in price moves, but they're going to be kind of holding a container saying, hey, once I'm crossed, I want to be out of this position here, but I will keep you in until I say so. So watch that for your traffic signals there. This one requires a lot of patience, Daniel-san here. So, again, most traders have ADHD today. They're looking for trades inside and out the same session. To really do this kind of longer term trading, you need to do like 1/5 to 1/8 of the normal size position that you do. So that being said, really reduce the position size and then plan on having the stop, depending on where your crossover is, but I'd like to have my crossover below where the crossover occurred, say about 50 to 75 pips maximum. So your stops are relatively reduced on this one here, not too bad at all, and you trail it with the crossover happening in the opposite direction. So that's really all you need to keep an eye on. Very, very simple to watch, but again, small position size because these things are swinging a big bat. Alright, so are you new into currency trading or just trading as a whole, global equity markets? If you're new or an intermediate trader, I specialize in private education and mentoring. I love taking new traders over a few weeks to a month, and no matter what your level is, I can bring you to a level of profitability inside a month because I'm giving you proprietary systems that I use on a day-to-day basis. These are institutional grade systems. Speaking of that, the 2S Sniper system is where they come from. So you have a chance to either buy the Sniper system directly, or you can get a more advanced level of education and mentoring by getting a few of the systems and then working with me one-on-one for a month, which is really a chance to fill up all the holes, get all your questions answered, and really take your trading to the next level. What could take you a year to learn on your own, I can teach you inside a month. And then for those of you that just want kind of some live market analysis a couple times a week and some trade signals, I give you trade signals out of my Sniper system, a couple of the systems, and I do a couple 1-hour webinars twice a week, which you will get access to. If you have interest or any questions about these services, feel free to email me directly, info@2ndskies.com. Otherwise, visit our website, www.2ndskies.com. Until then, good hunting, everyone.